Welcome back to the third video in the series about the whiskey market in 2023, because it's going through some tough times, should we say, and it's pretty much carnage in certain parts of the market. But I think that's oversimplifying it, and this is why this is our third video about the state of the market. We've already looked at the difference between growth investors and value investors, and we've also looked at the impact of the wider economic situation and how that is affecting the whiskey market as well. Now, before we sort of start this video, it's important to say that this only applies to certain parts of the market, but it's a very big part of the market. So a very large amount of the bottles by volume fall into these categories. And this will become clearer as we go through. Now, today we're kind of making a little departure from the other videos. And this one, we're going to look at a very light touch at game theory and how that really applies to the whiskey investment market. And game theory, it's a study of strategic decisions that are made in situations where players' choices affect others. So for example, if you've got two people playing a game, they can either be on the same side and mutually help each other, or they can pit themselves against each other for sort of like, and betray each other for their own sort of personal gain. Now, who gives a damn about game theory? Well, investment decisions are not made in isolation. So when one person buys, somebody has to be selling. So you can't have a buyer without a seller, and you can't have a seller without a buyer. Well, you can, but there wouldn't be a transaction. And what we're looking at is the transactions on the open market as in the auction markets. Now, specifically in relation to whiskey, if many people decide to buy and hold a popular whiskey, or like let's say that they're sort of buying and none of these bottles are appearing on the market, like our Macallan Coronation that we released, then, you know, we sold about 100 of those. There was 90 bottles in that edition, and only 3 have appeared at auction. So in this particular case, their rarity and value are possibly going to increase, and they already have shown a decent increase at auction because so few are coming to the market. However, if everybody decides to sell a certain bottle at the same time, then the value could drop. We've seen this in huge sections of the market. Look at, there's loads of Springbank falling foul to this, loads of the Macallan no-aid statements like the Folios, etc., all falling foul of this. So the game theories are going to try and explain why this is happening. So there are 2 theories that are relevant to the current whiskey market. We're going to look at one of them in today's video and one of them in another video. And the one that we're going to look at today is about zero-sum gains. And before we do that, please like and subscribe to this video if you're enjoying it. We talk about rare whiskey and collecting whiskey pretty much twice a week on this channel, so make sure you like and subscribe if you want to keep up to date with the market. Now, what are zero-sum gains? Well, zero-sum gains are a situation where one person's gain is at the other person's loss. So essentially, the change in wealth and difference is zero. So if you imagine this in relation to whiskey, if a distillery releases a bottle at, say, £1,000 a bottle, and a flipper sells it for £2,000 a bottle, the loss of the distillery is the profit of the investor. So no one's really making any money in a way, or the net. There's zero sum, you know, one person's losing, one person's gaining. And it's, you know, you can't have the gains without the loss of the other. And again, let's imagine that the person who bought that bottle, so let's say that you have the distillery released it at £1,000, it's flipped for £2,000, and then the person who bought it for £2,000 resells it for £3,000. Again, you see this sort of like this constant and so on and so on and so on sort of like chain of zero-sum gains. The gain is no additional, nothing is being created. It's just changes in wealth and changes in money. Now, a significant portion of the market, in my opinion, is made up of a string of zero-sum gains. You know, if you look at all the Macallan Folios, for example, you know, like, and if you look at a lot of the Springbanks, which have just gone absolutely mental for no particular reason other than people are deciding to get on the bandwagon for Springbank all of a sudden. Yes, Springbank make amazing whiskey, but really, are they worth the prices that people are being paid when you compare it to other whiskies, Glenfarclas, that are also available at a much lower cost? Ignore the quality of the whiskies there, because we understand in this industry no one gives a damn about quality in terms of pricing, and I'll sort of prove that with the Black Bowmore final edition, £15,000 at auction, which was then rebottled by Bowmore, this time in association with Aston Martin in 2020, and that's £115,000 a bottle. So the same whiskey in 2 different bottles is at the £100,000 difference. So There we go. Anyway, tangent, we're back on track now. The problem with this zero-sum gain situation and this daisy chain of zero-sum gains is that it can lead to a bubble, people. And did we not see this coming? Who said that a Folio 1 was worth £15,000? And it's no age statement whiskey that's been on the market for 5 years. It's been sold several thousand times. It's not rare. It's not old. It's not particularly good. There's nothing propping up its value. So this is where zero-sum gains comes in, because there's a lot of dangerous situations that added into the market in this sort of situation. So the main one is that there's no real value addition. You know, the whiskey's not getting any rarer, the intrinsic value is not changing, and the increasing price is pretty much just speculation. So let's look at these three in a little bit of detail. They're not becoming any rarer. You know, very few people are opening in, let's say the Folio 7s for argument's sake, the most recent ones. Very few people are opening and drinking these, and yet they're still changing hands, you know. So they're not becoming any rarer. There's still the same volume of them. Yes, we might have lost a very small percentage of them, but that's completely different to, say, a bottle of whiskey that was released in the 1980s and has been drank for nearly 40 years. That is getting rarer. There's also sort of like the intrinsic value isn't sort of changing. You know, it's not as if it's been reviewed by a reviewer and it's been, let's say, Serge at Whiskey Fun has reviewed it and given it 100 points. Then you might think, well, yeah, you know, people's opinion has changed about it because the whiskey is now objectively better than what it was believed to be. And this is what happens with wine, and this is how the whole wine market works. When a reviewer gives a wine a better score, particularly powerful reviewers such as like the Wine Advocate and Jancis Robinson, the price goes up, and as they give it a lower score, the price comes down. And then the final point that we mentioned there was that the increase in price is just speculation. It literally is just speculation, which leads us to the next point, which is this speculative bubble. So this rapid growth, it's characteristic of a bubble. You know, think of tulip mania, think of like in the 18th century, think of the dot-com bubble and sort of like the 2000s and whatnot. You know, it's driven by growth investors that are seeing the growth. They're seeing a chart like this and they're buying in here and they're seeing the value go up and up and up, and they feel like they can't do any wrong whatsoever. So what they do, they just come in, and and this is what's happened in the whiskey industry, particularly in this market. Loads of people have come in, loads of people, because to be honest with you, what did you have to do to make money until recently? Go to distillery, buy a bottle, flip it. Anyway, you get a speculative bubble, and a bubble is likely to pop, which it arguably has done for very particular parts of the market. The third point is the market confidence here. The sustainability of these price increases, think of that graph again, the sustainability of those price increases is totally reliant upon market confidence. This is where the greater fool theory comes in, and this is where we will sort of go to in the next video in this series. But the problem is with market confidence, it's great when it's going like this, bang, 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 it keeps going up and up and up. But as soon as it does this, or like even does this, it plummets down rapidly because everyone wants to get off the train, because no one really has an idea what they've bought or why the prices are changing. Otherwise they wouldn't have bought it in the first place. And the only reason they were buying it was because they saw this graph. Well, you know what? That's dangerous. And if you didn't know those dangers coming into the investment, watch this channel and subscribe. Fourth factor, external factors. We've talked about this in the last video, and there's a huge amount of external factors on the market. And, you know, if you want to look at all of those factors, watch that last video. But the problem is, in a sort of zero-sum gain market, where you've just got zero-sum gains one after the other, if the high price was solely based on speculation and not real value, then these external changes make the market entirely vulnerable. So in terms of the high interest rates putting a strain on people's pockets, the high interest rates also meaning people don't need to look to alternative investments, you see an exodus of the market. And of course, because the market was only propped up because people were seeing this growth, as soon as it tips down, all of these people fly out and disappear. And then the fifth one, which is, you know, we do talk about drinking whiskey a little bit on this channel, and watch out for the lock do, by the way, people. Such speculative price increases, like when you're seeing a bottle of like local barley go up like this, bang, 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 it pushes out all the genuinely interested people in the industry. And is that a problem? Yes, it is, because they're the core that are going to remain, but I don't think it's necessarily just the flippers' fault or the investors' fault, because look at this pricing in sort of a little bit more detail here. Why did that distillery release a bottle for £1,000 and know it would sell for £2,000 at auction? And you can use Macallan again as an example for this. Like if you look at the Folios, there's been 7 releases. Pretty much every time one is released, the price jumps significantly. Why are they doing that? This is going to be something that we're going to talk about in another video, because it's really interesting and there's a lot of other economic theory that you can look at there. But this sort of behavior of undervaluing their own items and releasing them to the market, it drives hype. It drives people to sort of sell out their products. It leads them to more money. You know, they don't give a damn who's buying the whiskey. Otherwise, would they spike the auctions with a bottle before it went on general release? I don't know. I think it's interesting. And the other question to ask is, why are people buying these low and no intrinsic value bottles? Why are people spending more on no age statement modern crap than on genuine old and rare bottles? Lack of education? I don't know. But these are the subjects of future videos, so make sure you like and subscribe to this channel to learn everything there is to know about whiskey investment.